Go. So, hey, lemlisters, I'm super happy today to be joined with Tae Hea Nahm, the managing director and co-founder of Storm Venture. He's been investing in B2B SaaS companies in the US and Europe. But Tae is also the amazing co-author of Survival to Thrival, a best-selling book that breaks down the B2B SaaS company building journey. Tae, thanks a lot for joining us today.
Thank you very much, and I really appreciate this opportunity to talk with your audience. Heard a lot of great things about this.
That's really awesome. We're really happy to have you here. It's actually great because just before, like, we will put the link to your book in the comment right now. But just before, you basically told me that you were planning to open source your amazing book at the beginning of 2021. Is that correct?
That is true. As we come out with an updated version, in particular, to share our new learnings on exactly how to find go-to-market fit.
Oh, that's awesome. Yeah. By the way, you were talking about like go-to-market fit, which I guess it's something that our audience or a lot of people have never heard about. So how exactly would you define it in practical terms for our audience?
Right. So we came up with the term go-to-market fit because we had so many companies that struggle, even though they had product market fit. And we went back and tried to figure out what happened. And so what we learned the hard way is that many times just having product market fit is not enough to unlock growth. And what it is that, you need to find what we call go-to-market fit, which is the growth formula, which is different from product market fit, which is about having happy customers. Another way of sort of conceptualizing a difference from, let's say, an investor or a finance standpoint is the key metric for product market fit is gross churn. In other words, do your customers stay with you? And the key metric for go-to-market fit is your magic number. In other words, how efficiently can you grow?
So how exactly would you translate it, like the part about like how efficiently can you grow, like in terms of metrics? What would you look at, for example, for SaaS businesses?
Right. So the ultimate metric that I see for go-to-market fit is this magic number, which measures for every dollar or euro that you spend in sales and marketing, how much new revenue or new ARR are you generating?
Okay, nice.
So that's the growth. But the problem is, and this is what every CEO I work with tell me is that's great. You as investors love it. It's a very simple metric. You can benchmark against public companies, all that kind of stuff. But operationally, it's a lagging indicator.
That's true.
As a CEO, you can't really say, I'm going to work on improving this. You have to work on other things, which results in the improvement of the magic number.
That's very true.
And so then we come out with ways of sort of what are the key operational drivers you need to work on that will result in having a good magic number, which means you have magic go-to-market fit.
And do you have any like really good example of companies that have kind of like nailed this go-to-market fit, and also like how exactly you would implement it in a startup playbook?
Right. So, I mean, we have invested in almost 200 companies, B2B software companies. So we have a bunch of examples. But what I find is that for SaaS companies, and we primarily invest in B2B SaaS companies, for SaaS companies to nail go-to-market fit and come out with this good magic number that I mentioned is you have to do three things well. One is you have to get a lot of leads that you can close. The second is you have to land them, and then you have to expand them. Because if you expand, you also get renewals, okay? So it's about leads, land, and expands. And now to give you a couple of examples based on that is one is Marketo. I was on the board of Marketo for 10 years, and they got a lot of leads through thought leadership. And then they were able to have a very efficient, scalable land process. In other words, repeatable conversion by setting up a high velocity inside sales that could ramp inside sales people very well. And then about expand, they had a repeatable expansion process through their customer success and the way that they set up standardized onboarding along with their product. So that was an example of Marketo, how they did leads, land, and expand. A different example would be, let's say, something which is more product-led, like Honeycomb. Also on the board of Honeycomb, which is a product, it does a lot of product-led growth in the DevOps space. And there again, they also get leads through thought leadership. They land many times with self-serve, but then they expand with sales working with customer success.
And yeah, sorry.
I'm sorry, go on.
No, go ahead, go ahead.
So I was going to say is that there are different ways of doing this, but it really comes down to is, you need leads, land, and expand. And depending upon which function leads, you have a different go-to-market model. And as an investor, we know it all works if you have a good magic number resulting and combined with a high growth rate.
No, that's really great. And basically, like for companies, what have you seen that was working really well? Because attracting lead is something, closing them is another thing, and expanding them is, for me, it's like 3 different areas. So yes. Have you noticed like particular details where companies were making all these 3 things work well together? Like, yes. And if you have like any examples, because I know like you reviewed a lot of companies yes. from your portfolio and yes. you worked really closely to them. So did yes. you have like any maybe like insights?
Yes. So I think what you ask is a fantastic question. Is sort of how to, what you're getting to is that this is a cross-functional exercise, and how to get the whole company behind it to make it work in a simple cross-functional way is a challenge. And by the way, these are the reasons why we're updating the book with our new version here. And so the first thing that we found is important is, who owns go-to-market? And so sometimes I hear it's owned by the VP of sales, or if it's product led, they might say it's owned by the VP of marketing or the VP of growth, or this magical CRO owns it. What I find though, that to really make it work, the person who needs to own go-to-market is the CEO. And the reason is a true cross-functional exercise. And many times the ultimate answer to go-to-market is coming out with the right product, the right product feature. Which the CRO doesn't know. So I'll give you one specific example that I found very helpful in driving a successful go-to-market playbook. And it was actually, this insight was given to me by the CEO of Honeycomb, Christine, who's a product person at heart. Is that she was able to link a key product metric to a key go-to-market metric. And so, because you can't, just like you can't have a team sort of say, let's focus on the magic number. You can't, it's hard to get a product team to just sort of focus on like a go-to-market metric. So the product metric that she had the product team work on is time to first value. And when we were first measuring it, it was in like weeks, and we're not talking about just simple onboarding, but just simply, when will the customer feel like they're getting real first value? And as we were measuring it, then the company product team would make improvements and all that to improve that metric until it got to a point where the customer was able to get value fast enough that self-serve took off.
That's awesome. And how exactly did she find that specific metric?
As I said, she thought about it, and then it was linking that product metric to this go-to-market metric. Okay. And so now when I look at companies and I look at the go-to-market playbook, a lead, land, and expand, one sort of key milestone that I always ask myself now is when will the customer will experience first real value? In traditional enterprise software, like let's say you're deploying a traditional like SAP, you would get first value maybe a year after you bought the software, right?
That's true.
After you bought it, then you got to pay for all this custom implementation, then training, and so then a year later you get your first real value. Versus some of these freemium products that you get first value even before you pay anything. So what we find is that as you're building out your go-to-market, there are certain key elements. And one is, when do you get first value? Because that time impacts what kind of go-to-market methods you can use or not use.
That's really, really interesting. And for the specific case, Honeycomb. Like, would you be able to share exactly what was that metric that they measure, or is it
Oh, yes,
something?
it was just time to first value was the first value there was, I think, to do a, a, a search query that the customers really cared about on their own data.
Okay, and essentially, like, did they tested different metrics first, or did they just say, okay, like it's a feeling from the CEO, she want to test it, so everyone's focusing on improving that time to first value, and then they saw that by improving it, it was linked to revenue growth, and then they focused on it, or was it how exactly did they come up, with getting there?
Well, she came up with that. I don't know exactly how she,
Okay.
you as CEO know too,
Yeah, it's you have ideas sometimes and you want to
Yeah,
test
yeah,
them.
yeah.
Okay.
But I just share that to as an example of how, I think ultimately many times the best answers to go to market or tied is connecting the customer with the product. Because ultimately, what is the customer cares about is the product, right?
Yeah.
And so this is an example of just one simple product metric which has profound impacts on go to market.
And do you feel like, because it's interesting that you mentioned SAP, because I mean, SAP is definitely like a really big companies, they're doing well. And I'm just wondering, like, because if, as you said, you're going to take 1 year before you get like the value, and sometimes it's even longer. So how exactly, like, don't you think that, for example, I'm going to rephrase my question. Don't you think that when sometimes like some products are freemium, people, even though they get the value very quickly, don't always see, the benefit of it just because it's free, so it's like price equal value. So when it's free, you
Well,
don't
I
see the value.
mean, you raise a great point. Just because you're getting value doesn't mean that you're forcing the customer to pay. Okay.
Yeah.
But in general, if you can deliver value much faster than your competitors, you have a fundamental go-to-market advantage. How you use it, how you monetize it are different questions.
Nice. So essentially, you're saying that people should find a competitor to SAP, which takes less time, to implement. And
I think in general, what I find is that the longer it takes to show first value, the longer the sales cycle.
Yeah, that's true. Yeah, very true. Very true.
But this is what I mean by how fundamental product metrics are so tied to go-to-market metrics that it's hard to just say, hey, the head of sales, you're responsible for the whole go-to-market, or the head of marketing, or put them together as a CRO, or put in customer success. It goes back to what you were talking about, how it's a cross-functional responsibility.
Yeah.
And so that it's what we're seeing is that the first thing is that you need the CEO to take the overall responsibility, because to align all the different cross functions, and how to get the team behind it is a challenge.
Yeah, definitely. And do you feel like, because you're talking a lot about, like enterprise B2B SaaS companies, and definitely like when you get to enterprise, you have much bigger deals. So I guess like your scale can like go faster. But do you have example of companies that would focus a bit more on like mid-market and find that type of traction and go to market fit?
Yeah, I mean, SaaS companies are perfect for mid-market and SMB, right?
Yeah.
I mean, even if you take Salesforce, I mean, in the early days of Salesforce was marketing against evil, but was really selling to the smaller companies, customers, and then they moved up market. I mean, now they're obviously, the enterprise, but if you look at Salesforce when it first started. So SaaS is a perfect delivery vehicle for the lower market and then moving upstream.
And it's interesting that you took the Salesforce example as, like moving up market, because a question that I had for you is like, okay, we talk a lot about product market fit, but for me, product market fit, it will evolve, with time, like, because your product when you on year 1 will be very different from year 3, etc. Mm-hmm. Do you think that your go-to market fit also has to evolve over time, or is that something that's more fixed and that you need to go into one and only direction?
It definitely will evolve over time. Okay. Um, the important thing about having go-to-market fit is repeatability. Okay. And so you want a repeatable process that is also scalable so that it's not just the founder that is selling, but you can have 100 sales reps sell or 500 sales reps sell. So you can get that scale and repeatability. So in order to do that, what companies will do is as they're scaling after they find go-to-market fit is that go-to-market playbook, all that becomes almost like a Bible within the company. And this rigid motion about how they are, who they are, and why they're so successful, it becomes sort of ingrained in the culture of the company. And so the challenge becomes then is how do you change that culture? How do you modify something which everyone says, well, that's how we win, you know? Like, for example, one of our companies, they always won when they went into trial because they had a better product than the competitors. So as part of the sales motion, they would always sort of gravitate to the customer saying, let's go into trials. Well, as you come up with a different product or different set of customers, it may be that you want to avoid trials. And so, but what people are used to, changing that is hard. But you need to do that for the following reason. As you say, you come up with new products, you want to go after new type of customers, or there's just natural evolution in the customers themselves.
That's really nice. For everyone who joined us, we are live with Tae, with co-founder of Storm Venture. So he's basically delivering tons of value for about 20 minutes. I know there are like a lot of questions here. So an interesting one from the audience and from Nathan is, how exactly would you pick your co-founders? So we're going a step ahead prior to launching the business, but I guess like, sure, because you invested, sure, in sure, so many companies, I guess it's interesting to know like.
Right. So I would say that the way I would look at if I were to pick a co-founder is, number one is I'd pick someone who's complementary to me. So if I'm a great technologist, I wouldn't want a co-founder who's just like me, because then you have 1 + 1 = 1 plus maybe 1.2. So ideally, I'd look at and sort of say, what do I need to win for this company to be really successful? And who and I are complementary, where 1 + 1 = 4. Okay. So having the right complementary skill set that's there to make the company successful is very important. And I see one common mistake is founders sort of picking a person just like themselves. Okay. So that's one, is sort of a complementary critical skill will be important. And then the second is, and more fundamental than the first one, I would say is more tactical. So that will help you in like achieving all the key milestones in the first year or 2 years of your startup journey. But then as the company grows, the company is going to change, and you want a co-founder that at the end of the day we all avoid founder drama. The biggest reason for failure I see in companies is that the founders go through a divorce. I feel like a bystander watching this process. And the biggest reason why I see companies succeed is that the founders are so passionate and committed. They stick together, even though their business completely collapses. They stick with it and they succeed. We've seen this now multiple times. And so the second thing I would look from a co-founder is someone that I feel, by sharing the mission, sharing the values, we're going to be in it through thick and, whether good times and bad.
Yeah,
those are the two main things that I would look for, is key critical complementary skill set in the first part of the company. And second is sharing that passion, culture, and values, so that we will be partners basically for a very long time.
Yeah, that's really good advice. Because I guess you're an investor, we have like a lot of investors question now. So someone is asking, because you were talking, about like this kind of magic number, when we know exactly that if we spend $1, we're getting X dollars in growth. So someone is asking, like, at what stage do you think a startup should think about raising money? Do they have to wait for this like go to market fit, or product market fit is a good stage? Like, what do you think exactly about it?
Right. So, I think at any stage, it's possible to raise money. Okay. It's just that you have different types of investors after each stage. And so if you have unlocked growth, then the number of investors that you have just explodes exponentially. Okay. So if you have unlocked growth, then there are trillions of dollars that are looking for high growth companies right now. So predictable, scalable, high growth. So if you have that, then the growth investors are going to be there. If you go a little bit earlier in the startup journey and you found product market fit, but you have not found go-to-market fit, then there's a set of investors there, and they're primarily, let's say, late seed Series A investors that would do that. But the growth investors would not be there yet. There you have to unlock go-to-market fit and show that you can scale. Okay. And then there are a set of investors that are also very interested pre-product market fit, and based on the founding idea and the founding team, and those tend to be the seed investors as well. So what you have is, at different stages of the company journey, you have different types of investors. It doesn't mean one investor is good or bad. It's just everyone has a different investment filter.
Okay, nice. And you invest at different stages now, if I remember correctly, or?
Yes, we generally are doing Series A. So we generally invest in companies that have product market fit, and we help them find go-to-market fit, but it's a bell shape. We have also invested in companies very early, and we've invested in companies a little bit later. So, we've also incubated companies. So Mobile Iron, which just sold this morning for $870 million, is a company that I hired the founders.
Wow, congrats then.
And we had a company, Airspace, where actually I was the CEO for 2.5 years and hired the first 24 employees. So we have an idea of the whole journey. And so, and understand the emotional roller coaster that every founder goes through, where I felt like, I went from the highest of highs to the lowest of lows in just like 5 minutes. So it's such a roller coaster. So understanding that experience. And, but based on that, we feel like we want to help companies through the entire, company journey, and also the accompanying people journey.
Yeah, that's really, really cool. And I was actually wondering, because we've talked a lot about, like what was the best practices when it comes to finding your go-to-market strategy and go-to-market fit. And I was wondering, like, because you've seen so many companies, you've been involved in some. So what do you see as typical wrong steps, or I would say like mistakes that people do when they try, to get to that magic number and also to get to that go-to-market fit?
Right. So I think the first biggest mistake is simply believing that because I have product market fit, I have go-to-market fit.
Okay.
It's just to understand that both are important, but they're just different. Okay. And so just understanding that difference is so important. That's why we came up with the term go-to-market fit. And now we're coming up with the measure for product market fit is gross churn. The measure for go-to-market fit is magic number. Both are important, but they're just complementary metrics. Okay. So the first is just understanding that distinction. The second is I find the way to work for go-to-market fit that's working with our companies that I like is, in retrospect, everything seems so logical. You should do A, B, and C, and then of course the answer is this. But when you're in the middle of it, it doesn't feel that way at all. Okay.
Yeah, that's very true.
Chaotic. And so when we're trying to find go-to-market fit, the metaphor that I use is It's like, you're looking for a pioneer to find a path through the woods. And I don't know how much you know about American history, but a pioneer is like a Davy Crockett, who's good at, he found a path over the Appalachian Mountains and so forth in the United States. And a pioneer is comfortable if they don't have a map, they don't have full supplies, there are these hostels, but they're willing to go and take the risk and figure out how to do it. In other words, without a playbook, without all the marketing collateral, maybe missing some features, they're still able to go and try to find that path. So in the beginning, it's good to have a few Davy Crockett's, and it could be the founder, it could be the CEO, could be the VP of sales, or it could just be a sales rep or something. You have a Davy Crockett, you have multiple Davy Crockett's trying to find the path. And as soon as you find something that's repeatable, that means you found the path, okay? And now the question is it something only that one person can do? In which case it might just be founder-led sales, or how can we then make it repeatable for others? So once we have that, we start taking what the person has done, David Crockett's done, trying to convert it into a map, a playbook. We hire other sales reps that we think could be compatible with that profile, and then trying to start now repeating it. And that's how we go from playbook 0.1 to playbook 1.0. And once we see that we get other reps or other ways of replicating the Davy Crockett, then that's the first major sign that we're on this path to go to market fit.
Yeah, that's really interesting. I would love to get your take on it, because you mentioned that it could be someone from the company or it can be the CEO. In
Yes.
my opinion, I think it's like much more powerful when the CEO does it, because I like when people lead with example. But do you see that it has an impact whether it's like a VP or a CEO doing like the first step and like showing to people? Have you noticed a difference, or is it just like me thinking about this?
As an investor and a board member, I would love it if the Davy Crockett was just a sales rep and not the CEO.
Okay.
That doesn't mean there's anything wrong with the CEO, but it's just, if the CEO is the Davy Crockett, I'm not sure I can hire 3 more reps like the CEO that can scale. Okay. But I know if it's a rep that is closing, is the successful Davy Crockett, I am much more likely to hire 3 more reps like that rep.
Yeah, it makes sense. But more, I would say like, like whenever the company is starting like building their playbook, do you feel sometimes that it's more transferable if it was a CEO like who was kind of the David Crockett, as you mentioned, rather than the sales or SDR? Or do you feel like there's no real difference in it?
I think that in general, it's easier if it's not the CEO. However, it's usually faster if it is the CEO.
Okay.
Okay. And so from my perspective, I just want a successful Davy Crockett at that stage.
Yeah.
I just want someone who's repeatably getting leads and closing. Okay. And then the question is, how do you go from that sample set of 1 to like 3 to 5 to 10 and so forth? And so there's a process that we follow that works. And this is what we're going to outline. And this is why I'm saying we're updating, is because these are the kind of learnings that we found as really important, and then to then make it more explicit. Mm-hmm.
Nice, really cool. And something I really liked also, was a concept you mentioned, which is unlearning, rewiring basically what worked before and becoming comfortable on both personal and company level. So any practical advice on how can someone unlearn in order, like to get basically more focused on this go-to-market fit?
Yeah, so Bob and I, we came up with this concept of unlearn because as we go back in our history, we found that we had to unfortunately let many people go. as the company grows, someone who is a superstar at one stage was struggling at the next and holding the company back. And in order for the company to succeed, we would have to make a change. And we found that there's very little literature that really talks about how to help a person sort of transcend to the next level as the company grows. There's a lot more about how to help the company scale, but how to help a person. And as we went through it, we realized that the biggest obstacle is having people unlearn what they're good at. So let me go back to this VP of sales, let's say. As I mentioned, pre-go-to-market fit, the ideal profile is of a sales leader is this Davy Crockett, right? This pioneer who can go out, find his path through the woods. Because if we don't have a Davy Crockett, we don't find this path, the company will die. So the ideal person is this Davy Crockett. But as soon as you find that path, the ideal profile of a sales leader is completely different. You don't want a pioneer. You want someone who's like Mel Gibson in Braveheart, where you want a warrior leader who can go out and is great at closing deals and great at hiring other warriors and fighting an enemy that's like 1,000 times bigger than you with no fear and just winning.
I like that
You
image.
want to go from a pioneer, and once you have that path, it's unlearn being a pioneer and being a warrior. But now as the company grows and you're above 50 reps, 100 reps, the type of sales leader you want is not a warrior leader, but someone who's great at managing warrior leaders and putting them in the same direction. And it's like Dwight Eisenhower, who managed all the allies in the Western Front. He was great at managing all the Pattons, the Montgomerys, the de Gaulles, these warrior leaders, which are high ego and so forth in the same direction. And the thing about Eisenhower was he was never a warrior. He never fought in battle. And so we just did this podcast episode of Mark Smith that, Mark failed the first time in this transition, succeeded later on in others. And, he was the head of sales at Infoblox, Arista, Rubrik, and took companies from 2 million to 2 billion in revenue.
Wow.
Okay. And so he talks about how he had to unlearn. And the reason why it's hard to unlearn is it means you're giving up something you're good at to learn something you're not good at. So it means you show weakness and you are you're feeling insecure. And so you go back and you say, now I understand why unlearning is hard. Now, how do I unlearn? Going back to your question, if what I would do and the advice we give is the first and important thing I find to unlearning is people have to understand why they need to change. Change to just change is a waste of time. Everyone's busy. People are working too hard and so forth. So the first thing is you have to understand how and why your job is going to change. So it's like this VP of sales, understanding that it goes from a Davy Crockett to Braveheart to Dwight Eisenhower, is to understand how and why your job's going to change. And as a result, then how I need to change. And then the best way for me to change, I think, is to get mentors, coaches, in particular, people that are, let's say, 2 to 3 years ahead of you in their personal journey. Because then they can provide relevant advice to you. And I think it's good for companies and boards to sort of try to find the right mentor for each of their executives so that they can help on this journey.
I think it's really interesting because challenging a lot of companies are facing, it's like, as you mentioned, the people you work with from the start, obviously as the company is growing, the first person in growth would probably, or in marketing would probably become the chief marketing officer. I mean, it feels like, you're growing and you want people to grow with you. However, as you said, I think like a lot of people, and from what I've read and seen also around me, is like, at some point, some people can't grow as quickly as the company. And sometimes it's important, like to hire from outside, but your idea is more like having mentors around. So how exactly would you know when it's good time for people to find mentors versus hiring from outside? Like, have you spotted any like signals or weak signals that can be interpreted like that? Or
Well, I think the first thing is, I think it's good to just have mentors from day one.
yeah, that's
You
true.
know, be proactive about it. And I mean, at the end of the day, is, you know, growth is what causes this change. Okay. And the faster you grow, the faster changes are going to happen. And what we see though is the changes are predictable in most cases. So 90% of these sort of organizational people challenges are going to be predictable. And so having someone that's gone through something similar 2 to 3 years in advance will really be helpful. So going back to you said about marketing, you know, you have this one person in marketing, and let's say this person is an absolute superstar at that stage and helps you get to the next stage in the company. And now, you know, you're going to have to expand the marketing team, you know, it's going to become more data driven. I mean, there are things that will have to happen. And if you can help that person change and transcend to the next level, it does phenomenal things for the culture of the company. You know, so if you can help, you can do that, then and you get that reputation, then future superstars will join the company because they see this as a way that they can become superstars. You know,
No, that's nice.
Marketo did this in the marketing space, and so they attracted great people in marketing, and many of them have now become CMOs at other companies.
Yeah, that's really great. And how do you feel like people should know when it's time, you know, to unlearn? Because, you know, like it's when does that come? You know, that time that you're like, okay, we're at a stage where I need to unlearn, when I need to you know, like get new skills, become better at something I wasn't good at before. Like, is that something you feel that comes naturally, or is that something that the CEO should handle, or how exactly would you?
So first of all, change is not something that comes naturally.
Yeah.
What comes naturally is to do more of what you're good at. Okay.
That's true.
That is, you know, for at least for me, and I see for others, it's, you know, that is the natural tendency. So to unlearn something you're good at, to learn something you're not, is, I don't think, a natural act. And that's why it all starts with is understanding how and why your job's going to change. Because then that sets the foundation for at every level, whether it's the VP of marketing, the CEO, or even board members, is to understand how and why your job's going to change. And one advice that you know, the CEO, former CEO of Marketo, Phil Fernandez, gave me, I thought was really helpful. Is I remember, you know, in a board meeting, Phil would say, like, you know, this person is just not going to make it. And I'm thinking, how does Phil know? Because from every outward sign, that department's doing incredibly well. Okay. And so I'm just trying to, and Phil had a reputation of being tough on people, and he was obvious and the toughest on himself. But anyway, so I'm sort of thinking about this. So I asked him, and so what he would do is he would do a thought exercise with them, and with that leader, all the leaders, and sort of ask the question, well, as the company continues to grow, like next year, what would your organization and your operating metrics and all that look like, and so forth? A thought exercise of like, what will this be a year, 2 years from now? And some people came up with the idea of just running faster. In other words, think of like a horse and carriage, okay? How do you get a horse and carriage to go faster? Well, you add more horses. So one simple way of going faster is you just add horses, more horses, okay? Another person would say, but we want to run better. So we want to go from horse and carriage to using trucks. So then we can carry more going faster. And so there's that sort of conceptual difference of, is it just simply running faster, or is it going to run better? And sort of getting a better, and based on that, you can see whether a person is getting mentally prepared to transform, not change, not only himself or herself, but the whole department as the company enters the next stage.
Yes, that's really interesting. I think the tips of you know, the annual review, actually asking the person, I don't think it has to be annual actually, but I think like asking the person where does he or she see herself like in a year, and where does she see the company going, and how she want to get there is really like an interesting
And
one.
what your organization would look like.
Yeah, exactly. Yeah, make sure like everything fits, and if it's a good one, then you know that the
Because it goes
person's
back
ready.
to what you were saying is like, what if you have one person in marketing who's an absolute superstar knocking it out right now? Okay. Clearly, if you have a one person marketing department, this person is like ideal, right?
Yeah.
It's showing success. But the question is next year, what do you want it to look like?
Yeah, no, that's really interesting. And do you feel like you know, at some point, I guess a lot of people, you know, whenever they build a company, they're not always super data driven. However, as you grow, I feel like from an engineer background, for me, data has always been like super important. And I know that sometimes, you know, for people, it's getting more and more difficult, you know, like to cope with data. And some people, you know, like to work with their feelings a bit more. But how exactly do you feel like that? Is there like an exact stage where data becomes like super important? And how exactly do you feel like everyone should be concerned with the data in general?
I think that one of the biggest trends we're going through right now is uh, the data disruption. And that data is getting data and using data properly is the key to everything. You know, whether it's data driven go to market, you know, data driven investing. Um, and you can see that in particular with like Amazon, you know. Amazon has a data-driven culture. And so I think that for me, if I were like starting a company now, one of the key things that I would put in the culture statement is saying that we have a data-driven culture. And what I mean by data-driven culture is that, you know, data overcomes emotions or hierarchy. You know, data can provide the early warning signals. You know, data is how we measure success. You know, data is something that we want to empower to people so that it's not just the executives, but everyone can experiment and come out with better actions. I find that data is critical, and I'll just give you some specific examples. So in order to really find go-to-market fit, you have to address an urgent pain. If you don't address an urgent pain, which answers questions, why buy now? You don't get a lot of closable leads.
That's true.
So you've got to address an urgent pain to succeed. However, in most startups I work with, the urgent pain and the founding idea are different. So how do you get founders to commit founder heresy and pivot from the founding idea to the urgent pain? If you have these kind of product discussions, and you've been in a lot of product discussions where you talk about what to build, where to go, you know, many times discussions are based on hierarchy, they're based on opinions or who screams the loudest, all that. But if you come up with a really data-driven approach, then I find that companies pivot to the urgent pain faster. And as a result, they unlock growth much faster. Okay. Once you're starting to then, let's say you have a playbook and it's about racing to become a category leader with others, that having the right go-to-market data or metrics is key to really having the best execution. So to have great execution, you need these go-to-market metrics. To fundraise, you know, you need go-to-market metrics too, so you can communicate quickly to an investor that they should put in more money in you, that putting in more money means you grow faster. And obviously, as the company becomes large, like Amazon, you know, the largest like Amazon, you can see how important data is there too. But I just find that we're entering a new world where I really like how Amazon says that like data is what overcomes like hierarchy.
Yeah, I like it as well. I think it's a good quote
Yeah.
because I guess it removes also like all the, as you said, like the person who's the loudest in the room. I think it's important because for me, data removes ego. It's
Yes.
much easier, like to build, your next decision on data. There's no right or wrong. It's just testing, and then you decide.
Exactly. Exactly.
I guess we're almost like until the end, like time flies. So I'm gonna go back to the question from the audience because it's quite there are quite a lot. So my team has selected a few. There's a question from Jennifer who's asking actually what the best place to meet and network with investors, especially now, like with COVID and pandemic. Like, what's the best way? Do you, for example, reply to emails, like, or how exactly does that work to get in touch with investors?
Right. Obviously, it's become much harder for both the investor side and for the founder side. So whatever frustrations founders feel, I think investors feel as well. So I would give two suggestions for reaching investors. The first and best way in any time is to get an introduction. The
Okay.
better the quality of the introduction, the better. But if you have a mutual friend that can make an introduction, it could be a lawyer, it could be an executive, it could be a college friend. Anyone that would make a mutual recommendation will mean a lot, because the recommender also can vouch for the founder personally, and so forth. So that is the best way. Um, Without that, and I know for me is, I check all my LinkedIn mail. And so I find that now that we don't have conferences, physical meetings are harder, that LinkedIn has become the replacement. It's sort of now the basic replacement. So the best way to like contact me is just connect on LinkedIn, and you can ask me questions over LinkedIn.
Awesome. So I'll put actually your link, your profile link into the comments, so someone from my team will do it. And another person, Florian, is asking, like, do you need all associates to be full time in order to succeed? Like co-founders, when you say associate, I guess co-founders.
I think the co-founders have to be full time.
Yeah, I agree.
Whereas the co-founders have to be more than 100% committed. I mean, you can have advisors, you can have engineers and others part-time, but I think to be a founder means it's like Cortez, you burn the boats and you're not going back.
Yeah, no, I agree with that. And I guess we have like a bit more time because there were like one question I wanted to ask you also, because in another book you wrote, like you're talking, about flywheel of leadership talent. I really like this concept, but can you like maybe elaborate a bit on it?
Sure. And thank you for asking that question. We wanted to point that out because there's two paths for a superstar to have career success. The first is obvious, is, transcend to the next level, so unlearn, and then learn the new job and keep transcending to the next level. And that's the obvious path that everyone sees as a path to career success. The second path, which is not obvious, is what we call the flywheel leadership talent. Is that, suppose, you are fantastic at finding go-to-market fit, but you just don't like scaling. A person like that can do incredibly well, and especially in places like Silicon Valley, because there are so many companies that need to find go-to-market fit. And so you can join a company, solve that problem for that stage of the company, pass the baton to someone else who can scale, but you've achieved a huge milestone for the company, you get sufficient equity, and then you can move on to the next startup. And the venture people would love it, other founders will love it, and so forth. So that's what we call the flywheel of leadership talent, where people like VCs, other founders and so forth really love to have these people come in and solve critical problems like find go-to-market fit, or find product market fit, or scale, or things like that.
No, that's awesome. That was a great, I guess, conclusion word. Tae, thanks a lot for joining us today. if people want to reach out to you, you mentioned like LinkedIn. Is there any things you wanted to say or add before we end?
Oh no, I guess I should say is I actually like getting questions because I find that it really forces me to think about things and makes me better. So I find there's no such thing as a stupid question. I like actually all questions.
That's really great. Thanks a lot, Tai, for being with us. And thank you everyone for watching. I'll put Tai's link in the comment. We'll also get back to you when the book is live and open source in the Q1 of 2021. So Tai, have a great day.
Okay, thank you. Okay.
Bye-bye.